Market volatility has dropped sharply over the last couple of weeks, and I think the number one reason for that is that whatever could have come in form of fiscal stimulus in the US and as well monetary side, with the Federal Reserve and the ECB, all of that has been priced in. Right now, everybody's just sort of waiting and seeing, which means that we're seeing consolidation across all markets, and I do think that that can continue for a bit longer. However, though, there's still some good opportunities out there, and it's mostly about buying the dips, not necessarily buying breakouts, rather buying the dips. And with that in mind, we're going to talk about the British pound against the US dollar. Okay, so you're watching the GBP versus the USD, and this is a 4-hour chart that we can see here. If I flip to a daily chart, actually, that since pretty much March last year, we're in an uptrend. Of course, we've been challenged sometimes. There's been a short-term downtrend here that lasted a couple of weeks, but overall, we're pushing higher and higher and higher. And GBP USD is something that we mentioned in the past, and I do think it can continue to trade higher in the short term and also in the longer term. Now, if we talk about the longer term first, then you have this ascending triangle. The difference between this level and this level here and this level here suggests that if we take the difference here, which is about 200 pip, and plot it here, then that effectively tells us that we can trade as high as 1.39. And that would happen if the market manages to establish itself and trade above 137.06. Now, I don't think it's just going to be like a massive rush just because we trade above that level. I think it's going to be like a difficult move to the upside. But it's still going to be bullish, and there are various ways of trading this. So with the help of the support and resistance indicator, which is what you're seeing here, these different levels, we had a few bullish ideas, and because we just tried to go with the trend. So here, for example, you can see that in January 4th, we bought here around 135.52 and then got out here at 136.57. And here on January 11th, we bought at 134.97 and then got out here at 136.63. And then here, this is the last trade. So got involved here on the 22nd, which is Friday last week. And then the price effectively hit take profit overnight here at 5 a.m. London time. Now the indicator, which is, as you can see, relatively good on picking these lows. In fact, when I've been using the indicator since November, it's been right 66% of the time. And on average, sort of the residual ratio we're looking at here is 1.6, sometimes it's with 2 times the risk. And the indicator is effectively telling us to continue to be bullish, and it's identifying this level down here, which is 136.13 as a trend defining level. Now we went down here towards this level, and I didn't buy again because I thought we were going to trade a little bit lower, but between 136.73 and 136.14, I think people will continue to buy there, and the indicator is confirming that. And then people are probably going to try to trade us up to 137.12, and then we'll see if it trades much higher. All right, thanks so much for watching. Don't forget to give it a like, the video, and I'll see you guys on Wednesday for the next market update. Thank you, and bye.